In all seriousness, Noah, so the write-up portion, for those of you that write every once in a while, it's really all about if you have a good idea and something you're really passionate about writing about, it usually flows pretty quick. Sometimes, some weeks, it's you're just grasping for something. The write-up probably takes me, I don't know, 20 minutes, 30 minutes, something like that. Finding the stocks takes a little bit of time. We're trying to save you time and cut to the chase and make it so you don't have to look at the entire market. And so myself, Greg Holmes, and
Grant.
Grant Larson with the stock report. Look, we try to scour the market and do scans and I look at my entire watch list. I look at all the ETFs and I'm trying to find what do I think are the most actionable setups for the next week. Scanning through the watch lists, doing scans, that might take 15, 20 minutes. It doesn't take as long because we know what we're looking for. And so I can quickly just, jump on a chart and within half a second determine if I like it or not. So, then you cut the video, then you edit the video, then you post it on the cloud, then you put it on Tackle. So, probably an hour to 2 hours to when all is said and done to get all this out.
And you must be multi-talented there, because whenever I run a report, it usually takes me 2 to 3 hours. And that's probably because I, work a little slow and take my time on some things. But one of my favorite things is when we are comparing and, kind of putting together those watch lists, there's a lot of group effort goes into that. And we throw out our, best candidates and kind of give each other ideas on our scan results. And so we usually have a really good list of stocks. Now, when you're looking for those candidates on the options report, talk to us about what are some of the criteria you must see on these stocks that make the bull list and the bear list, and
Sure.
What kind of strategies that we can then apply on those.
Yeah. When you first start trading, it seems like my perception when I first started was that you would start using more and more indicators, that when you're advanced and all this stuff, you then are more sure on exactly what's going to happen. And it's actually kind of the opposite, right? What you'll see on most of our charts, Noah was just showing, the futures. All he had was candlesticks on there. Did you guys notice that? He really didn't have any indicators. He didn't even have moving averages. That chart was just straight naked.
I like my charts naked as a jaybird, because I'm doing this long enough. Like you saw me draw the Bollinger Band.
Yep.
I knew in my mind what the Bollinger Band would look like. I know what a MACD, a stochastic. I mean, I've looked at so many thousands of charts over the years. I already have a good idea of what the indicators are going to look like anyway. And then I do keep, the indicators, the moving averages and things on some of my charts, and I want to get a glance of what other people are looking at.
Yep.
But yeah, I agree with that. That's actually a really insightful commentary there, because I thought the same thing. If I had the magical combination of indicator systems, but then I would notice more and more the professional traders and my mentors over the years, they all kept their stuff relatively simple.
Yep.
And it's not because they didn't find value in the indicators; it's because they just, I think, like me, they already know what they're going to look like.
Yeah, and I couldn't have said it better myself. That they're derivatives of price, and so if you know what price is doing, you kind of know what the the indicator is going to do. But to that end, on my charts, I'm primarily looking for just those basic price patterns. For those of you that have taken the Master Trader Legacy, bull retracements, breakouts, bear retracements, and bear breakouts or breakdowns, if you will. Honestly, guys, it all comes down to that. It's just we look for uptrending stocks, and we either buy them when they break resistance or buy them when they bounce off support. We look for downtrending stocks. We either short them when they're falling off a resistance or short them when they break support. All patterns really are a variation of those four core ones. And so as I'm scanning through my list, no, I'm just looking for those. And there's going to be slight variations depending on what the market looks like. Noah will tell you some trending markets, it's fish in a barrel finding something. When the market's a hot mess, some weeks it's a little bit more challenging.